How you guys doing today? Welcome back. Today's February 21st, 2022. We only have another week of this month. It's been a rocky month to say the least, and that's okay. And we're getting into March, which should be hopefully a better month for a lot of people. If you are new here, my name's Evan. This is By the Bulls Trading. In this episode today, I'm going to give you 8 great stocks you should be watching this week. So make sure to stay around to the end of the episode to make sure you enjoy the content, you like the content. Make sure the picks that I talk about, watch them, see what's going on. But if you are new, thank you for being here. Thanks for joining us. 8 great picks coming at you today. Let's talk about it. Firstly is my course is available, 25 free lessons on my YouTube. If you can find this YouTube channel, you can certainly go ahead and find that course. It's all for you, technical analysis, fundamental analysis, all these kinds of great things I'm talking about. Check it out. It's for free. You'll truly enjoy it. If you really enjoy what I do, consider subscribing to my Patreon in the description box down below. We do a lot of great morning newsletters, 5 a week, evening newsletters, 5 a week. The Discord community has admin that are there to help you get better with trading. We talk about supports, resistances, trend lines, patterns, EMA lines, volume profile, RSI, stochastic, the vortex indicator, options, leap, spreads. All these great things. Go check it out. $25 a month. Prices have to go up when the website's done. Go check it out. I'd love for you to go, try it out. I'm here to help you. It'll be fantastic. If you are a big fan of what I do, consider liking this video, subscribing, and commenting down below. It does help me out quite a lot. I can't compete with the larger channels when it comes to getting a bunch of subs and just getting the algorithms push me out. I kind of have to rely on my community kind of bolstering me up just a bit. With that being said, to encourage you to do so, I'm going to give you 5 seconds of horribly awkward eye contact to encourage you to get off my big dumb face and scroll down below and like, comment, and of course subscribe. With that being said, let's do it.
Prolonged eye contact. Prolonged eye contact. Prolonged eye contact. Prolonged eye contact.
So, with that being said, lastly, these are 8 great picks no one else talks about. If you've been here for a while, you know that I talk about stocks that no one else does. I'm not really interested in hype. I'm interested in value and momentum trading. So we have 8 great picks. No further ado, let's get right into it. So as you can see, AWP is our first pick of the day. Secondly, you can see Gremlin Cam is back. He's here in full effect. Oh, there he goes. As soon as he gets on camera, he gets shy. And I'm glad I plugged that in so he can just immediately leave. Attaboy. So first place, AWP. What's great about this is it's a very simple support play here. There's 2 main ways to trade and to buy into stocks for stock trading, and the first one is value, the second is momentum, and we have those based off of bullish trends and neutral trends. This is a neutral play. What we give up in the bullish trends of supports coming with convergence and all this kind of great stuff, we get back in simplicity. This is a very simple play. Anything below $6, it's a really good deal because it breaks down the support. You're losing 1, maybe 1.5% if you're really liberal. But let's say it hits $6 and it makes a nice move. You're looking at a 4-to-1 just to hit resistance, which it's done 4 times this month alone. So it's a very low risk, high reward possibility here. Again, I am concerned with this breakdown here, but the support still holds. It's a nice horizontal channel, nothing too complicated. Some of these plays we talk about have some complicated setups. This is a simple horizontal play. 650s are our highest volume node. Folks like to do business here. If it can make a move up to that, we're talking an easy close to 9 or 8 to 9%, risking about 1 or 2. I love what I see. Let's check our indicators together. What's so cool about this channel is I don't scan with or chart with indicators. The reason being, for a lot of beginners, indicators are going to be their crutch, or what would you say, it's the cake and the icing. When you become better at trading, you're going to understand that the TA is the cake. Yum, yum, yum. And the indicators just the icing. Ooh, tasty. The reason is that indicators can show us 4 main things: momentum, trend, volume, and volatility. That's it. TA can show us clarity of trade. It can give us all in our kind of discussion of structure of risk management, technical, mental, funnel analysis, risk management, goal setting, macro markets. All that stuff relies on the technical analysis. The indicators is just the icing. So if you are brand new to trading, if you are new to this, you'll see live what a veteran season goes through with you. Live. I've not looked at these together. Never checked these out before. When it comes to indicators, you'll see live. Let's do it together. AWP, 10 crosses are great. The blue line's a 10 EMA, purple's 50, red's 200. You cross the 10, look at, you have some really nice run-ups. You cross the 10, nice run-ups, really good run-ups. The main thing you're going to notice though is that the run-ups happen over the 50 EMA line. So while you're below it, it's going to be resistance. Can the 10 cross be fine? Yeah, 2% holding for a few days, 4% in 5 days, nothing too bad. So can you play a 10 cross tomorrow? Sure, but a 50 cross is much better. Both are fine for your momentum entries, but I think right here we have a good value. I think we have a good value because RSI is fair. It makes sense. We're going sideways over a month now. It's just in the middle here. That's fine. Stochastic is low. No bearish divergences. It's just a really good value overall. And then bulls are lower than bears, showing some form of value. AWP can very easily be a purchase for momentum play if it does go a bit higher, but a bit lower here, it's a really good value purchase. I think AWP should be watch listed. Again, simple support play. What we give up in convergence and a lot of great features is a simple, nice setup. AWP, I'd watch list it. I do love what I see. Next is CYH. Oh, he's back. What's great about this play is a fantastic wedge. 1 hit, 2 hit, 3 hit, 4, maybe 5 as it holds right here. I mentioned that because a lot of people draw trend lines from A to B, and that's incorrect technical analysis. Any one of you idiots, any one of me idiots, can draw a line from A to B, but A, B, C, D, in this case, E, if it holds, is much more consistent. We also see that the resistance trend has 3 hits, 4, 5, 6 consistent hits as well, making a gorgeous horizontal wedge. Earnings, overreaction came down. Earnings, overreaction, nice little move. Earnings, massive run up, came down a bit, pretty choppy. They go either way here. This is an obvious overreaction from earnings. Right into a classically strong old resistance becoming a new support area. Trend line is bullish. It's a nice resistance here, but overall, it's a really good looking play. I love what I see. Would I rush in here? No, there's no sense rushing in with this kind of sell off. But if it kind of makes a support like these all take some time to reverse, see how long that took to reverse? Right here. Took a long time to reverse. Long time to reverse. It has a nice consolidation period. Give it 2 or 3 days, but if CYH does hold here, it's a great risk versus reward overall. When it comes to our indicators, a 10 cross is fine, right? Cross the 10, some nice moves. Again, though, if you're below the 50 or 200, they can be fairly short-lived or a lot of nice fake outs like this one, right? This is a nice move, fake out. Nice move, fake out, right? So, can you wait for a 10 cross? Sure, I wouldn't. They're all so far away. I'd buy off of value, right? And I think we have value because RSI is dummy low, stochastic is dummy low, and bulls are bottoming out where they always do. Bears are at the top. So CYH is definitely showing some exhaustion from the bears' perspective. They want to sell and then get out, and then bulls want to buy back in. Of course, do your due diligence. Why did CYH sell off in the first place? Why are they earning so bad? But if it's a fine company, it could be a really good swing trade or day trade. But CYH, overall, I do love what I see. I would definitely watch list it. Next is EQH, a great ascending triangle. One of my favorite patterns. I'm very biased about this, and that's okay. And here's why. Because look at the macro trends here, this ascending triangle. Basically what this is happening is saying folks said 1850 is fair, then sold at 35. And it said actually 28 is fair, and then sold at 35. Then it said, well, 30 is fair, sold at 35. Then 31, now 35 again. We can see bulls have all the power, all the momentum. It's looking beautiful here. Consistently getting this $36 range. Of course, the volume is going to be an issue to break out, but when it finally does, it's going to be major. Earnings, massive overreaction. It happens all the time. If we can see 32 to $31 range, it's an absolute steal. I want 3 or 4% lower, so I'm anticipating some form here of kind of waiting for it to kind of fall to value. So if tomorrow's red, if these macro market sell-offs we saw all weekend hits this tomorrow and comes down 3 or 4%, EQH is going to be a gorgeous looking play. It is important to note this is a head and shoulders forming, so this does break below like 31.50. I would certainly get out. But this trend is gorgeous. This pattern is gorgeous. When it comes to our indicators, if you want to play a 200 EMA line cross, that's fine. Even a 10 cross here is fine as well. Plenty of fine 10 crosses, 200 crosses, 50 crosses. They're all there. But of course, I think that's fine. But I think a value purchase is better. But I think a 10 cross or 200 cross is also fine as well here. RSI, it's low. That's good. Stochastic is bottoming out. I don't see any bearish divergences or bullish divergences. It's just a good value. And then bulls are low and bears are high. EQH may be bottoming it out here. It's a possibility, but I think it's definitely going to see a bit more red tomorrow if markets sell off. I would definitely watch list it because it does hit that 32.50 range. We're risking a percent to make 5 or 6. And again, in this kind of market, 5 to 1 odds, 6 to 1 odds should be a bare minimum. But EQH, it looks really good. Next is LWLG, another simple support play. It is important to note that the main volume took place at the $1.30 range. So it's up a good, 300, 400% this year. So I mean, like, I'm not super excited to be like, it's a good value. But this is a very simple support play. Would I go hog wild and buy in here? No. I think I'd want to see at least hit, 630, 632. Anywhere down here, we can risk 3 or 4% to make about 25 to 30. But right where it is now, we were talking about a 10% risk to make about 20, which is fine. It's a lot of percent, but I'm not really overly excited about the 10% risk. It's way too much for me, and it's not my kind of play. It could be for you, but for me, it's about risk management. I don't see it here currently. So if LWLG takes a nice red day tomorrow, comes down like 630 range, now we're talking my language. Shout out to Charlie Day. Otherwise, it's a very simple support play and a resistance play. Not much trends going on. It's a very simple looking play. When it comes to our EMA lines, sure, 10 crosses are fine for day trading, short-term swing trading. That's fine. And you can see currently the big deal is the 50 EMA line. When you're above that, you're going to have a good time. When you're below that, you're going to have a not so good time. So as we get closer to the 50 EMA line here, a 50 cross is fine. You cross the 50, look at that day trade, 13%. You cross the 50, that's fine. But for here, we have a good value. RSI, it's low. Stochastic, it's low. I wouldn't declare any of this to be a divergence. It's too close. It's just a good value. And then bulls and bears are tied. We're moving sideways. LWLG to me could be an easy 7-8% cheaper to make it a great value purchase, or a good 4 or 5% higher to be momentum purchase. I think it's in that dead man's land, that dead man's zone of like waiting for it to make a move. But I think tomorrow or Wednesday should really tell us what we're looking at. But LWLG, nonetheless, I would watch list. I do love what I see. Next is NSTG, a great wedge down. Look at this. 1, 2, 3 solid hits. A fourth one's very close. Fifth one's very close. And the resistance trend is obvious. What's happening here is we're making a new support. If I go to 10 years, you're going to notice it's a newer IPO, right? It does have some historical data lower, but it's nothing too crazy. This is a very strong support area historically. Old resistance area became a support. So you may be seeing closer to 28.90. If it does drop down somewhere closer to this area, so I wouldn't be hog wild jumping in here. Again, I think this is going to be a play. I want to see it come down to 30, 50, maybe $29 if possible. Let this bad boy drop to me and make some nice moves from there. For now, I think it's fine. I think it's one I want to see go red. It's selling off mightily. We're down what, like 25%, yeah, 23% in 7 days. Let it settle, because look at the reversal times on this. It takes its time. It takes its time. It takes its time. It took its time. Right, there's no point rushing in here. Let NSTG fall down to us. And when it comes to our indicators, look, the 10 just crossed under the 50. 10 crosses are fine. Once again, they're good for day trading and short-term swings. You have some nice little 10 crosses, but as long as you're below the 200, which is our strongest resistance, as we can see, it's going to be short-term kind of moves here. When I wait for value, yeah, I mean RSI is getting there. Stochastic's low. Bulls are low. Bears are high. It's definitely getting to value. Now if it reverses before then, so be it. I missed the move. Whoop-de-doo, it's going to be just fine. But I think NSTG just a bit lower makes a whole lot more sense. I like what's developing. I think tomorrow, as you can see, it's a theme that a lot of these plays are either close to being at value or close to being momentum play. The markets are kind of confused over the weekend. I would give it some time to think about and let the thing kind of play its way out. But NSTG, great value. I do love what I see. I would definitely watch this dude. Next is OCSL, Oak Tree Specialty Lending, a great higher lows, higher highs, very consistent. Now it's important to know there's a good chance this may be turning into a horizontal channel. If that's the case, if it breaks down below 730s, 720 is a great purchase nonetheless as well. Earnings ran up, ran down, earnings ran up, ran down, earnings runs up, runs down. Obviously the rundown's coming. I think OCSL up here again is a bit too high. I want to see it again 1%, 1.5% just lower, because right here, we're going to make about 1% or 2 to risk about 1% or 2. Nothing too crazy, nothing too great. The risk here is minimal. It's a great beginner trade. As you can see, maybe 740, 735. Very low risk, risking 1% or so to make about 3 or 4 of a small move. OCSL needed a bit lower, just like many plays today. When it comes to our indicators, again, you have a green day tomorrow across the 200 and the 10. That could be a go signal, because the 10 crossovers are pretty good. they're pretty good, right? They're good for at least breaking even. If that happens tomorrow, you're fine to go. When it comes to our value, RSI, it's fair, and that makes sense. We've been going sideways for months here, right? It makes sense. It's 45 dead center in the middle. Stochastic's low, showing some life. Bulls are low, could be lower, and bears are high, could be a bit higher. Implying to me again, there's two options here. Your value purchase closer to 735. Your momentum purchase closer to 755. I think you can go either way here. I think the key word for today in this exact episode is patience. I think tomorrow's going to be a good day for patience. Nonetheless, though, OCSL, I'd watch list it. I definitely do love what I see. Next is PNC Bank. This is my favorite play of the day. I could be, and this is why I'm a good YouTuber and a good person in general, I may be a bit aggressive with this trend line. I see this gap I saw earlier that may be a better trend of what's kind of aspiring. So if we do drop to like 196, 195, I wouldn't get too worried. But the resistance trend matches very well. So is a supporting one. But either way, PNC here is clear higher lows across the board. Clear higher highs, earnings, massive overreaction to it, then before and then after, and now we're kind of finding our footing again. If we see a red day tomorrow and it breaks down like 198, I'm not worried. I'm going to get excited because if I can see this bad boy come down like 195.7, 195 flat, it's going to be a very good purchase, very good risk versus reward. Even here, you're risking 2% to make about 4 for a small move, a full move being 6 to 171 kind of odds. But overall, PNC Bank's not going anywhere. Good earnings constantly, good dividend if you get a good hold. Maybe you can hold it for a long period of time. But PNC is always a fine purchase. It's like a Apple or another big bank, like a BB&T, whatever it is. It's always going to be just fine. PNC, when it comes to our indicators, a 10 cross once again is fine. It's okay. And again, a 50 cross is better. 200 crosses is your best option. Can you play them? Sure, they're too far away for me. 3 or 4% is too much for me, given the risk. I'd buy into value. Again, I think we have value forming. As we can see, TA shows it just a bit lower. And of course, RSI is low. Stochastic is low. Bulls are low. Bears are high. Overall, PNC right here is a good play. I think if you give it another day or two, it gets even better. I'm not rushing into any of these, so I think it's a fine watch list item. If I was going to go long at any tomorrow, so far it's PNC or this next one, in my opinion, or EQH a bit lower. But again, great watch list item, PNC. I do love what I see. Last is UTHR. I want to get a better shot of my cat for you. Oh, my action shot. He's just living the dream, isn't he? Oh, yes. Famous. You like to be on the cameras, don't you? Next is UTHR, a great ascending triangle. Again, the resistance should be, on a macro scale up here. But I think it's important to note that in a small move, we're looking at 205 area. Again, great higher lows. Yes, there's a small wick break. Oh, booey hoo hoo. Great higher lows. Great support right here. The gap, the resistance, support right here. It's looking great. Again, the risk is going to be close to 3 or 4%, more than I want. But a good move is 9 to 12%. It's still 4 to 1. If UTHR here can come down to 195, shows some life in reverse, I'd be pretty happy to buy in. The reversals are very quick compared to the other ones. Look at this. Quick. You're looking at an intraday kind of move here. So UTHR, therapeutics company, the DD needs to be made. I'm sure earnings is coming. I would be vastly aware of the earnings date. Make sure it's coming. It should be coming the next few days here. Look at massive run up, run down, run up. It gets very volatile. If UTHR has a bad earnings and crashes below 190, you may be in trouble to about 177. And again, if you lose the trend line, it's just a simple support play. Not much going on. But for an ascending triangle, UTHR is absolutely beautiful. When it comes to our indicators, again, a 200 cross is fine. A 10 cross is fine. A 50 cross is fine. But all of them are too far away for me. I want to buy into value. Just to clarify again, I mentioned this because there's two ways to enter a stock. Value, which again you're used to. You go to Walmart, there's that DVD bins, and it's $5. Like, boy, gee willikers, $5 for a DVD I can watch on Netflix for free. But again, I just want to buy a DVD. It's a good value, right? That's a value purchasing on a stock. It hits a good price and you're in. Momentum, you can use the EMA lines, SMA, or MA lines. Or you can use a indicator like a MACD crossover. It's all fine. You just buy when the momentum shifts in your own opinion to being from red to green. So I think for me, UTHR, these are too far away. I want to buy value. Value shown because of the TA, of course, but RSI could be a bit lower. We're getting there. Stochastic could be a bit lower. We're getting there. And then bulls are getting low, bears are getting high. UTHR, I think, needs one more red day to truly find value. And if that happens, there's a chance we lose the trend line. If that's the case, I just wouldn't touch it. I move on. There will be more plays out there, more green days. FOMO and boredom are what leads to beginners losing their accounts and blowing it all up. And for me, I'd rather just be patient. That's my own. If it loses that, I'm not going in. If it holds that, I would go in. There you guys have it. I appreciate y'all being here. I hope the audio sounds better. We fixed it today. Let's go. We'll see you guys this week for more content. I have some great new ideas coming out. We're not really buying into the hype. We're not being Mr. Oh, the markets are going to crash. Markets didn't go up. You know what? We make quality content no matter what and stick to what we're good at. And that's what we're going to do.